Perception is strong and sight weak. In strategy, it is important to see distant things as if they were close and to take a distanced view of close things. Miyamoto Musashi. I love this quote. I love Miyamoto Musashi. The master Japanese swordsman never lost a duel, was not only a master of Bushido, but was also a master in art, calligraphy, sculpture, painting, an amazing person. And let's delve into just a little bit of what he is saying here. Perception is strong and sight is weak. In strategy, which is what we engage in every day, attempting to determine price movement. So in strategy, it is important to see distant things as if they were close. That's why we talk about backing off and watching on Wednesdays. What's happening with the weekly candle? What's happening in the big picture? And this is another good one. And to take a distanced view of close things. Now, what does that mean? It means you don't get bent out of shape when there's one down day when the market's been going up or one up day when the market's been going down. It means that, again, you seek perception. You don't get caught up in the zeitgeist of that single day. And the beautiful thing about not paying attention to what the talking heads are telling you on television, which is buy the products we are advertising, the thoughts we're trying to get you to believe, but instead stepping back and watching the only thing that matters, price movement, weekly vertical crossovers, trend lines, the derivative oscillator, the price percent oscillator, the Bollinger Bands, the charts in the time frames, the weekly, the 2-day, and the half-day. Again, my friends, this is what reality is. This is what your perception should be. Do not get confused by your sight. You have to perceive what is real. Now, let's get into the real world and get away from theory and talk about what's going on in the markets. Everything up for the day in our four big charts, the S&P, the Qs, that's the NASDAQ 100, 20-year bonds, and gold. Let's first jump into the S&P 500 up 0.32%. Now, as we start the week off, we see the high that we hit during the day was 338.34. In the prior week, the high 338.28. So we've gone up a little higher than the prior week. We have a green up candle that's forming. Derivative oscillator gaining momentum. Price percent oscillator starting the week off a little bit weaker. So we'll pay attention to that as the week moves on. We still have 4 more days to form that candle. Now remember, our last 2-day candle ended on Thursday. So the latest 2-day candle just finished drawing. It is, again, a 2-day candle that represents Friday and Monday. What do we see there? We see prices above the 2-day trend line. We could try to redraw that, see if we can make a better, closer trend line. Someone was asking me, great question, about when do you draw your trend lines and in what direction? They always go in the direction of the last vertical crossover, whether it's on the 2-day, the half-day, or the weekly chart. It always goes in that direction. Even when the trend is changing, you don't redraw the trend line in the new direction until you have a crossover. Why? Because it's the trend lines that help us see where the direction was in the prior move and as it continues and when it starts to end. So you don't just redraw it. Now, what do we see going on? Well, again, we see upward movement not reaching as high a high as it had previously. We look 338.28 and 338.34. So, I'm sorry, it is reaching a higher high. Golly, is that hard to see. So hard to see that that's actually higher. Okay. And what we see is prices well above the weekly. It is above the 2-day. Now we're going to look at our 4-hour or half-day chart here in just a minute to see what that means to us. Look how the price percent oscillator is still barely edging up. Derivative oscillator gaining upward momentum. So we'll continue to watch. We have had a successful trade so far. The jumping in point for the last 2-day recross was 326.50, somewhere along there. What's the high that we've gotten? 338.34 in how many days? That's 10 days of market movement. That is really nice. When do you take your profit? When you hit your profit percentages, when you have set certain parameters, whether it's violations of the 4-day and 2-day trend lines, whether it's the 2-day chart rolling over with the 2-day crossover, whether it's a violation of the weekly trend, whatever it is that you've learned with the charts you've experienced, and that's why we say you have to practice trade every day. We're not a stock calling service, we're an education firm. We're here to help you learn. We're not here to tell you when to buy and when to sell. That is for you to learn. And if you don't learn that, you're just a puppet on somebody's string. You have to empower yourself. We're not going to do the work for you. We will help you find weekly vertical crossovers to pay attention to for practice trades. But again, the real magic is knowing when to get out. Now, let's look at what's going on the half-day chart. We see that that half-day chart actually rotated over, started to rotate over there it did cross over on the afternoon of Thursday. So if we tried to keep this up somehow, and again, we always draw it in the direction of the crossover. That was down. It, of course, has violated that moving up. We see the price percent oscillator still moving down, derivative oscillator losing some downward momentum. We see, again, remember, the price percent oscillator is an oscillator too, and because of these day and a half of down movement, it's still trending in that direction. Of course, the way it ended the day with a slowdown in the up movement caused that to move even more. So we're above the down move in the 4-hour, above the up move in the 2-day, and above the up move in the weekly. Those are all things to pay attention to. The fact that we violated the down move as far as price movement goes on the Heikin Ashi candlesticks is interesting. You balance that against the fact that the number one indicator we use, and again, this is the smallest chart, so you put the least amount of hope in that, least amount of counting on the down movement continuing. But again, you see how that has spiked down. So we'll watch it, but it's not dispositive for us because look how much price is above that 2-day trend line. So are you taking all this in? Are you putting in your daily market worksheet, which you ought to be doing if you want to supercharge your training? Those daily market worksheets, weekly market worksheets, and trade worksheets, all included for free in your show notes, are extremely important. Also, for those of you who are subscribers, we've got a great training for you. Do not allow the complexity of charting to scare you away, because we talk about simplicity in charting to give you the ability to have that perception and not rely on sight. Perception is strong, sight is weak. That perception comes to you from being able to read charts and not be scared by what you see on the news or just price movement for a day or two, knowing what's really happening. If you're not a subscriber, you won't get that training. How do you become a subscriber? Go for free to chartingwealth.com and sign up. More charts to move through, but important knowledge and things to learn and wisdom to glean from what we just said. Now let's move on to the Qs. That's the NASDAQ 100, the tech stocks. You can see the weekly vertical crossover we had all the way back in May. Beautiful. Now, we look at things, we see the price percent oscillator still heading up a little bit. Derivative oscillator about flat. This is just the first day of the latest weekly candle. High 275.84. Prior high 274.83. So we've hit a higher high. That's good to see. Go to the 2-day. It's tried to cross over once. Is it going to recross again? Don't know. But since it did not on Monday, we got to wait till Wednesday. So mark your notes to say, look at this on Wednesday. If you have a 2-day recross, maybe around 350, consider jumping into a trade, a practice trade going up. Maybe. It depends on what the charts tell you at that time, but note down the possibility of that. Derivative oscillator's already gone positive. And again, we have a weekly uptrend. We just need that 2-day to turn in the same direction. Might be happening soon. Might not. We have 2 days to find out. We look at the 4-hour chart. It's trying, or the half day rather, it's trying to cross over. We used to call it a 4-hour. It's not 4 hours. It's 195 minutes. What do we see going on? We see up movement in the morning, further up movement in the afternoon, getting close to crossing over on that 4-hour chart. And when it does so, we will change the trend line, but not until that crossover occurs. That's where we are on stocks. Let's move to bonds. Bonds up for the day, 0.25%. Look at the price percent oscillator, though, accelerating down. We see the derivative oscillator also negative. And look what we have. We have a red down candle starting the week off. How is that? Because these are Heikin Ashi candlesticks. They show us average pace, which it is showing us is down, as is the price percent oscillator. Don't know how Heikin Ashi candlesticks are actually calculated? I'm going to put at the end of today's video a special training, the most popular training we've ever put out. Hundreds of 150,000 or more people have taken it. Going to put it at the end of today's training. Look for it. On the video, you'll see a link to it so you understand what Heikin Ashi candlesticks are all about. What do we see on the 2-day trend line? Of course, we had that 2-day crossover going down back on the 11th. That was Tuesday the 11th. I'm going to actually redraw our trend line now for us and see if we can't. Can we connect? Can't quite connect two. 3 rather. Almost, but not quite. So we'll connect 2 there. We see the trend moving down. So again, derivative oscillator gaining downward momentum, price percent oscillator heading down. What do we see when we look at the half-day chart? This is where we see all this strong down movement, and then it starts to flatten out in the morning and in the afternoon. Up for the day, 0.25%. Derivative oscillator, which was hammering down, has slowed down, was flat in the morning. Well, no, it was flat going into the morning, then down a little in the afternoon. Derivative oscillator losing momentum. So keep your eye on things. We'll just wait and see how things sort out. Now again, we had that 2-day recross going down, which has served us quite well. If you're in that down move on something like TBF, what is TBF? That is the ProShares short fund. It actually has been moving up as TLT, 20-year bonds, has been moving down. Why is that? Because it's a short fund. It moves in the opposite direction of Treasury bonds. So just a little interesting thing we have there. I'm going to also attach at the end of today's program the training that we have on inverse funds. If you're not taking that, don't understand inverse funds, it's a way you can short the market. Now, there are perils there. There are perils there because it costs more and it is repriced every day, but it's something that if you're interested in being able to short ETFs or the market in general, you need to practice trade those and see how well you can do and learn the lessons on trading those things. When you start getting better at it, you can fractionally trade. That is, take 50 bucks, 100 bucks, and buy a fractional piece of a share and see how well you can do that. You can practice entering. You can see how the repricing and the fees work and how well you can do. You need to, again, practice all of this stuff. Use what we teach you and what everyone else teaches you, all the books you read, put it all together. Develop your own methods and sources. Have we looked at the? Yes, we looked at the 4-hour or the half day. So now we're going to go to our last chart, which is gold. Gold up for the day, 2.17%. What does it show us, though, on the weekly chart? We just have a red open box candle after a big red spinning top, means slowdown in the up movement, indecision. What do we have so far? More slowdown in the up movement, but it is still a red open box candle, not a red down candle. But again, a slowdown in gold cautiously. I mean, a 2.17% day is a darn good day. We see the price percent oscillator edging up, derivative oscillator still losing momentum on the weekly chart. 2-day chart, what do we see there? Well, we have a green spinning top for the last 2 days, means indecision tending up. But look at that price percent oscillator, just hasn't managed to cross over on us going down. Is it going to bounce off the red signal line, or is it going to follow suit of what's happening with the derivative oscillator and hammer down? Don't know. That derivative oscillator is hammering down because of 4 days of big, strong down movement. So far, don't have a huge up movement to move that smaller and in the opposite direction. So we'll wait and see long as things don't cross over, if you've jumped into that gold trade all the way back on, oh gosh, Friday the 26th of June, you jumped in somewhere around the 165.80 mark to a high of 192.07, no, 194.45, you're still doing okay, my friends, at the end of the day at 186.50. But again, don't want to lose everything you've gained if you have a crossover. Now, if it's going to return back to its volume, but you sure have lost a lot. When you penetrate the 2-day trend line, you penetrate the weekly trend line, and again, you're close to crossing over on that 2-day. You had at least 4 days of opportunities to minimize what you could have gotten on the high. And again, capturing everything on these highs is very difficult. We admit that. That's why the jumping in point is so critical to jump in on, best of all, a weekly vertical crossover, which of course we had teamed up with a 2-day crossover. And that, of course, gave us incredible profit potential for the practice trade. That's where we are on the 2-day. Let's go to the half-day. Half-day's trying. It's trying. It's trying. Up in the morning, a little further up in the afternoon, pushing through the weekly trend line. See if we can see things cross over going up. How many of you are interested in a 4-hour crossover to jump back into gold? The most dangerous of all. The most dangerous of all. Can you make a good case for doing that if that happens? Let's see. Love to hear what your thoughts are and what you do and what you learn from doing that. Now, that is it for the day. If you've not purchased our book, and we had a number of purchases over the weekend, I'm going to get those fulfilled and out. Our second edition of Charting Your Way to Wealth is available, and we want you to have a copy. Follow the link in the show notes to buy yourself an autographed copy. We'll get it out to you, and it will supercharge your training, let you know what we do here, why we do it, explain the ins and outs, the price percent oscillator, derivative oscillator, Bollinger Bands, Heikin-Ashi candlesticks, and our methods of jumping in both the weekly vertical crossover and the 2-day recross. That's it. If that's all you wanted to cover were those 4 big charts, we are done, my friends. Now we're going to move on to a few more charts for those who just love it and can't get enough. What's Bitcoin up to? Up almost 4%, 0.89% for the day. Look at that weekly chart reaching a higher high. Nice. Derivative oscillator moving up, price percent oscillator moving up. 2-day chart was flat. Isn't anymore. We've got a green up candle that has formed, reaching a higher high, particularly based upon what happened on Monday. What do we see with that 4-hour chart? Trying its best to cross over, going up. Again, nice to see. We have, again, since we had that 2-day crossover going up, right there, 2-day crossover going up on the 28th of June. That was a 2-day recross. Things have slowly but surely accelerated, went flat for a while, and then popped up again. What do we see on, I've already showed you that half-day chart. Trying to get up in the morning, further up in the afternoon. Price percent oscillator, not quite crossed, derivative oscillator trying to do so. So watch that. If you see a recross on that 4-hour chart, that'd be nice. Now let's move on to real estate, up 0.81% for the day. And again, starting the week off with a red spinning top. That's not super, open box spinning. So a slowdown in this last week's up movement. Price percent oscillator still going up, trying to push through that 200 period moving exponential moving average line. Derivative oscillator gaining upward momentum. The 2-day chart still about flat. Red spinning top forming. Again, indecision tending down, so pay close attention to that. What do we see on the half day? Down in the morning, up in the afternoon, not enough energy to cross over yet. So keep your eye on the 4-hour, see if it continues to move up, and watch for that week 2-day chart in case it crosses over going down on you. Remember, we had that 2-day recross. We've since, let's see, the jumping in point somewhere around 181.26. And of course, where were things at the end of the day? 181.81. So again, the high, 183.47. So again, real estate is just trying to find somewhere to land. And maybe in the long run, it may be way down. But We'll continue to watch and chart it for you. What do we see going on with USO, which is oil? Oil up for the day 1.45%. That's nice. Last week we had a high of 30.75. So far this week, 30.84. Price percent oscillator heading up. Derivative oscillator still losing momentum. Go to the 2-day chart. What do we see there? Red spinning top. That's some indecision. Slow down in the up movement. Price percent oscillator, though, still heading up. Derivative oscillator up, booming up. And we see what's happening with the half-day chart. It was heading down on Thursday afternoon and Friday, but then bumped up on Monday, crossed over, going up on Monday afternoon. So again, good to see. We'll continue to watch, see what there is to see here, what there is to learn. Remember, we had that weekly vertical crossover on oil back at the beginning of July, the jumping in point somewhere around the 28.31 mark. And what has our high been? I guess this is this latest move, 30.84. So 30.84 from 28.31 to 30.84. Again, oil trying to slowly trudge up. When you look at what oil lost, it's got a lot of momentum to gain back from its high of 104 down to its low of 16.88. Whew! It's doubled since then. So again, we'll continue to watch all these things for you. What's silver up to? Up for the day 4.23%. Again, you can see where silver staved off that peak in the prior week up to 27.39, closed the day at 25.62, starting the week off with a green up candle, but not reaching higher highs. Price percent oscillator going up about the same angle it had been for the last couple of weeks. 2-day chart still flat pretty much. Derivative oscillator negative. Green spinning top forming again after peaking back on that 2-day candle on Friday the 7th that represented the 6th and 7th of August. And then sideways since then. And of course we see on the half-day chart trying to cross over, going up less than flat, or I guess we would say more than flat, moving up. Derivative oscillator still negative. That's where we are, folks. Hope that you enjoyed everything we brought to you today. Always happy to do so. So appreciate all of our supporters, particularly the folks that sponsor us on Patreon. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.